Well, mortgage rates edging lower for the second week in a row. The 30-year fixed rate mortgage averaged 6.35% in the week ending May 11th. That is down from 6.39 from a week ago. With rates remaining inflated, homeowners who may be looking to sell are staying locked into their lower rates, which is then creating low inventory of new home sales for sale. Does this mean it's a seller's market? Well, according to a new report from Bank of America, roughly 40% of those surveyed believe the current market could be in favor of those selling. For more on the real estate reality, let's bring in Matt Vernon, Bank of America head of retail lending. Matt, there's a line that really stood out to me here in the study. 69% of prospective homeowners plan to buy a home when it's right for them, regardless of price and interest rates. I'm curious about what percent of that number are actually first-time home buyers?
Yeah, roughly a third of our business today is in first-time home buyers. So I think that number is pretty astounding, the 69% in the market that we're in. And it just shows the resilience of the American consumer and the fact that the dream of home ownership still is alive and well, and disproportionately so we're seeing in the younger generations as well.
Matt, give us a sense of what the activity looks like today. Yes, we just did see the slight decline in rates on a weekly basis. Are you seeing more potential buyers coming off the sidelines yet?
We are, but I'd caveat that with saying the inventory challenges are still real. So while we have many borrowers that are interested in buying a home, that inventory challenges is making a little more difficult on them. That said, what we're hearing from consumers is they're ready to act when they find that home that becomes available. And to the earlier comment, even at the rates that we're at today. So they are, again, very, very resilient.
Specifically, you've been looking at numbers from Gen Z as well as millennials. I'm surprised that 56% of Gen Z say they plan to purchase a home in the next 2 years. What does that tell you, number one, about the savings, but also just how motivated they are, even in this higher rate environment?
It's really interesting. And it's kind of the opposite of what you may think with all of the challenges that are out there. But I think that sense of home, and compare that also with rental rates and the ability and the fact that those have continued to climb from a national perspective and regional perspective, I think they're making the smart decision to begin to think about how they pursue equity and a home of their own. And if they're going to ultimately spend what they're spending and they can buy a home to do that, they should go and do that route for sure.
Ma'am, when it comes to when people are trying to figure out exactly what home they can afford, what are you seeing just in terms of the trends for down payments and how much people are willing to spend, I guess, reflecting that off of their income?
Yeah, the survey respondents said that they would be willing to put aside 25% of their income, which is relatively the same as what it has been in previous surveys. I would tell you that it's the borrower today is much more responsible in evaluating what they should afford versus what they could afford, meaning that they are focused not only on the housing payment, but all of the other ancillary costs that come with it to ensure that they're buying a home that they can ultimately stay in long term.
Where are you seeing the momentum right now? Is it still in some of these markets that really boomed at the height of the pandemic, whether it's Florida or Texas or Colorado, or are we starting to see other markets emerge now?
I'd say it's still heavy the Sun Belt states. Think about from Phoenix down and through Texas, and then over to the East Coast, over to the Charlotte area, and then down and through into Florida. Those are the primary markets that we're seeing the most aggressive growth in. You're seeing that from an inventory and price perspective as well, while the Northeast, Pacific Northwest, and some of the central states not nearly as aggressive, if you will.
Matt, do you think the worst of the housing slump that we've seen, is that behind us at this point?
So I think two things, right? One, we expect at this point that we've potentially reached a peak from a rate perspective and that we'll begin to see rates come down. So that's a positive through the end of the year and into next year, not precipitously, but slowly and gradually come down. So that's a positive. The challenge remains around inventory, though. We have way more borrowers that are out there. There's a stat around 3 million millennials who make over $150,000 that are looking to buy a home, and the inventory is just not there. So until that begins to solve itself, I think the market is still going to be incredibly competitive and challenging, but we will see the positives of rates coming down. So the affordability side will help.
Inventory is still a big X factor there. Matt Vernon, it's good to talk to you today. Bank of America head of retail lending.